The IMF has raised questions about a global recession in the later part of the year, but US officials have been quick to downplay the forecast. Our business editor, Ross Greenwood, joins us now. The IMF hasn't always got it right in the past, but it's a pretty grim outlook. What's it actually said, Ross? Take us through the finer detail.
I'll try and explain what's taken place here. It's broadly the Western world. So think about the United States, Europe and the UK. They're the ones that are most likely to fall into recession. The interesting part about this is the forecast for the rest of the world is incredibly strong. And in particular, one part that Australia is now trying to get closer to, and that is India, which has got some of the strongest economic growth. So the real growth is coming out of the developing world. So it's a real two-speed economy in many ways. You can see here that the forecast for the global economy is going to slow down quite dramatically, particularly in the United States and in the advanced economies. But the rest of the world is going to be pretty strong. So the real problem here is the attitude of banks into the future, whether there's a credit squeeze as the slowdown really causes some concerns about risks. And so Pierre-Olivier Gouranchas, who is the chief economist of the International Monetary Fund, said really the supply of money is going to be the thing which determines whether the world ends up in recession or not.
A sharp tightening of global financial conditions, which is sometimes called a risk-off event, would have a dramatic impact on credit conditions and public finances, especially in emerging market and developing economies. It would precipitate large capital outflows, a sudden increase in risk premia, a dollar appreciation in a rush towards safety, and major declines in global activity amid lower confidence. In such a severe downside scenario, global growth this year could fall to about 1%.
So Pierre-Olivier there is really painting the worst case scenario, and that is that there's a massive credit squeeze. And that was really the conditions that were faced in 2007 when the global financial crisis hit. But in the United States, the Treasury Secretary there, Janet Yellen, said there is absolutely no sign of this credit squeeze happening yet.
I've not really seen evidence at this stage suggesting a contraction in credit, although that is a possibility. I believe our banking system remains strong and resilient. It has solid capital and liquidity, and the U.S. economy is obviously performing exceptionally well with continued solid job creation, inflation gradually moving down, robust consumer spending. So I'm not anticipating a downturn in the economy, although, of course, that remains a risk.
Look, I don't love what she's saying, but I love her accent. But Ross, what is the outlook for us here in Australia?
OK, so the outlook is for Australia's economy to slow, and it's interesting to hear Jim Chalmers really talking about this. But this is no surprise. I mean, Australia's economy has always been expected to slow later this year, in particular as the 10 interest rate rises the Reserve Bank has handed out catch up. Now, just to give you some description, here is International Monetary Fund, and this is its forecast. 2022, 3.7%, going to 2023 this year, 1.6%, and then 1.7%. So you can see that slowing of Australia's economy. But by contrast, I want to actually show you the latest forecast from the Reserve Bank of Australia's economy. And what that shows you is, again, 2022, slightly different forecast there. But over the course of the next 2 years, they're saying that Australia's economy could be even weaker than the International Monetary Fund suggests. So as people are saying, there is no recession coming here in Australia. It's not forecast by most of the major economies, economists rather, or indeed the government or Reserve Bank. But it is certainly going to slow, and that's something that in particular Jim Chalmers is talking about in trying to frame the forthcoming budget. Now, there's going to be cost of living relief there. The government has got $20 billion more in the bank than it had in October last year, but it seems as though they're not going to put any long-term spending programs in place.
OK, well, I can't wait to see that budget. It's going to be a cracker. How did the local market react this morning?
Well, really well. It had one of its best days in months yesterday. It's just continued that on today. So we're going to have a look at the ASX 200 as it's opening pretty much right now. And you can see here up by almost 2/3%, another 47 odd points on it. And you can see it's pretty solid right across the board. If we keep on going forward and have a look at some of the other bits and pieces that are taking place, I think the Australian dollar at the moment is the other thing that's pretty important. 66.51 US cents, relatively steady. But one issue is, remember that as Australia keeps keeps its interest rate low, it means we import inflation from other parts of the world as our goods are more expensive. One last thing for you, Laura. I want to show you the price of Bitcoin. Bitcoin went through $30,000 yesterday for the first time in about 12 months. Have a look at it here. It's kept on going overnight, up another 0.5%, $157.
Yeah, right.
So don't imagine that's a flight to capital, really, in many ways, while the US dollar and these forecasts about a downturn in the economies are really sitting out there as well.
Yeah, it's got a bit to go, especially if you bought Bitcoin at about 80,000. But, you know, it's all about perspective, I guess, Ross. Just before I let you go quickly, I'm excited about this budget. Second budget from Jim Chalmers. That needs to be, you know, a budget that has a bit of grunt in it, given where we're at. All the circumstances you've just taken us through, the Lamido coming off, which is that low and middle income tax offset, it effectively feels like a tax hike. And we've even had economists like Bill Evans from Westpac say the government absolutely needs to give some cash handouts to those that can't afford to pay their bills at the moment.
Yep. There's no doubt. Look, that's coming. But do bear in mind treasurers who are bearing bad news about how tough things are. Because really what Jim Chalmers right now is doing is setting up Australia for a significant amount of tax reform. Now, the one thing you've already seen a little glimpse of it with superannuation by raising the taxes for those with more than $3 million in their superannuation accounts. Family trusts are said to be next. But there's a range of other measures that the Labor government will bring in place in the name of trying to bring this budget back into some semblance of balance. But in reality, it's all about paying for the other programs that Labor has got. Plus also some of the very big ongoing expenditures that Australia is going to face into the future. And that includes the NDIS, quite clearly our defence spending as well. So just be careful about treasurers who are warning you about how tough things are, because that generally is them setting you up for a tax increase somewhere.
Yeah, I feel that. But also, I would say you don't really highlight problems ahead of the budget unless you're going to kind of offer a bit of a solution when you hand it down. I thought it interesting that they've highlighted migration in the last couple of weeks. What do you think they're going to do there?
Well, here's the interesting part about it, and that is that if you have significant amounts of migration, Australia is one of the very few countries in the world that can almost migrate its way out of an economic problem. That's precisely what we're doing right now. 600,000 net migrants came in last year, another 450,000 or more coming in this year. But those people have to be housed. It puts pressure on infrastructure, on water, on electricity, on all these things. Plus, of course, the rental crisis that Australia already has. In many ways, in my opinion, the Reserve Bank eventually starts to cut interest rates, which it will, and then you've got a lack of building, plus migrants coming in. You've got the recipe for a housing boom coming up over the next 18 months to 2 years, depending on what happens in that global economy, of course.
Yeah, absolutely. Ross, thanks so much. We'll see you soon.
No problems.